Hello, I'm Ravi Koka, founder and CEO of Stocksnips. Active investment strategies continue to dominate across the top 500 firms that offer both active and passive strategies. However, active assets are growing at a slower pace compared to passive assets. Active managers are under increasing pressure to find alternative methods of alpha generation and to leverage AI and machine learning techniques in their portfolio models. In this video, I'm going to talk briefly about a new sentiment factor that is derived using big data, natural language processing, and financially trained machine learning models. In the industry, several factors are used to generate alpha while reducing systematic risk. Some of these factors, as shown in this chart, are growth, value, quality, and momentum. Stocksnips has introduced a new alternative factor, new sentiment. What is the Stocksnips new sentiment? This signal is derived by analyzing a large corpus of over 10 million articles, including SEC filings, where the financial text is transformed and quantified into a new sentiment signal. We cover over 3,000 US equities, and we have 5 years of history. The sentiment signal has been validated by clients and researchers who have confirmed double-digit alpha. This is the schematic that shows how the various documents from roughly 20 plus sources are transformed into a new sentiment data set. And we also have a sentiment analytics platform that you can use to see the data in a visual form. In this chart, we anecdotally show that sentiment is a lead indicator of share price movement for Apple. The green line, which is sentiment, starts rising on 25th April 2018, and price follows a few days later. We have statistically validated the correlation between sentiment change and price change. The mean correlation across 981 randomly selected tickers from the NASDAQ NYSE universe was 0.22, as shown in this chart. This is statistically significant. Certain sectors, in fact, are higher than the mean. This is technology, consumer discretionary, and communications. Sentiment momentum is measured as the value that is subtracting the 50-day moving average of sentiment from the daily sentiment. Carnegie Mellon University conducted a study. It was a regression used against the pharma French factors to measure the alpha potential of the new sentiment signal. They found that both for large cap and small cap, they were able to generate excess returns over the market return. And in the case of small and mid cap, it was the daily sentiment that was the signal that influenced the outcome. And in the case of large cap, a bifactor model that weighted both the daily sentiment and the sentiment momentum, performed better, and the return was 8% over market return. In another study that was conducted by Cirrus Research, new sentiment outperformed traditional factors like earnings revision estimates and price momentum. In fact, Cirrus has replaced price momentum with new sentiment in their aggressive growth portfolio, which is now available through the Goldman Sachs Folio Financial platform to RIAs and to other clients. If you'd like to explore our data set, please contact us at info@stocksnips.net. Thank you.